Welcome to the Stock Market Daily News podcast for Wednesday, January 15th, 2026. I'm your host, bringing you a sharp, data-driven look at yesterday's trading session. U.S. markets kept investors on edge as the S&P 500 eased back slightly after recent all-time highs. The Dow Jones also dipped, while the Nasdaq held mostly steady as tech stocks continued to attract interest. The big headline? Unstoppable bullish sentiment faces skepticism, with Goldman Sachs pushing back on the market's biggest fears and Warren Buffett's cash dilemma making waves. Here's what you need to know from yesterday's session and how it could shape your next move. First, Warren Buffett's guidance hits home for investors flush with cash. In a conversation with CNBC, Buffett revealed Berkshire Hathaway's frustration with a surging $350 billion cash pile. Despite his legendary appetite for deals, Buffett lamented the lack of attractively priced opportunities, saying, "Cash is like oxygen, you need it, but it's not a good asset." Berkshire remains a net seller for a 12th straight quarter, highlighting a thin field of value-driven buys even as big names like Nike and Airbnb hover under $100 billion in market cap. The takeaway: investors may need patience as bargains remain scarce and blue chips look pricey. Second, Goldman Sachs is going head-to-head with the economic doomsayers. In a sweeping outlook for 2026, the bank lowered its U.S. recession risk to just 25%, down from last year's 35% estimate. Goldman argues that headlines about overvalued stocks and AI-driven bubbles are overblown, with robust consumption and broad S&P 500 earnings growth supporting further upside. The firm forecasts a base case 7% total return for the S&P this year. For investors, it's a reminder not to let fear drive you to the sidelines when underlying fundamentals look solid. Next up, gold's rally refuses to quit. Precious metals were last year's best-performing major asset class, and gold miners like AngloGold Ashanti have rewarded shareholders with bumper dividends. Thanks to geopolitical tensions and central banks diversifying away from the dollar, gold prices keep climbing, angling for new highs and sparking analyst upgrades for dividend-rich stocks. But with prices outpacing some Wall Street targets, the risk of a near-term pullback is in focus. For income-minded investors, gold stocks are shining, but it may pay to monitor valuations closely. Turning to crypto, the rise of perpetual decentralized exchanges, or perp-DEXs, has grabbed attention from traditional finance. According to Delphi Digital, on-chain crypto derivatives platforms saw trading volumes triple in 2025, hitting over $12 trillion. While still dwarfed by traditional derivatives, the growth signals swelling demand for decentralized, low-fee trading, and tokens like Hyperliquid could benefit from this shift. For risk-tolerant traders, the evolving DX landscape is one to watch as adoption accelerates. In summary, Dow and S&P eased amid profit-taking, while Nasdaq techs found a floor. The market mood remains cautiously bullish, with big banks and blue-chip legends diverging in their outlooks and alternative assets, from gold to crypto, extending their momentum. Stay tuned this week for upcoming earnings from mega-cap names and New York Fed policy comments that could jolt volatility. Don't forget to subscribe and follow Stock Market Daily News podcast for your fast, reliable map through Wall Street's moving pieces. See you tomorrow.